Okay, so we're going to unpack some breaking news today. It's a little different than our usual deep dives into earnings calls.
Yeah,
But this is big. This is market-moving stuff.
absolutely.
So we got to talk about it.
Yeah, sure.
BlackRock, the world's largest asset manager.
The 800-pound gorilla.
Yeah, they're pulling out of the Net Zero Asset Managers Initiative.
Yeah, this is pretty fascinating because it's not just any company, right? This is BlackRock. We're talking about trillions of dollars under management.
Yeah,
And when they joined NZAM back in 2021,
right.
they pledged to have something like 75% of their clients' assets
Right.
invested in companies with emissions targets by 2030.
By 2030, yeah.
So that's a huge amount of money.
Right.
So
Yeah.
this exit is a big deal.
Yeah, that's 75% by 2030. Like you said, massive commitment
Huge.
for them to backpedal. Now it's definitely sending a strong signal.
Yeah, it's a big about face.
So what's the official word? Why are they doing this?
Well, they're citing what they call confusion about their practices and also legal inquiries that they've gotten from public officials. So it sounds like they're feeling the heat a little bit.
Yeah.
Particularly from Republican politicians who have been pretty critical of ESG investing.
So the political climate is playing a role here.
Absolutely. I mean, we've seen this wave of anti-ESG sentiment building.
Yeah.
States like Texas have divested from BlackRock specifically because of their stance on climate change. And this isn't just a U.S. thing either.
Right.
There's this broader pushback happening against this idea of linking financial interests with climate goals.
Yeah.
I mean, look at the Net Zero Banking Alliance.
Right.
It's lost almost all of its major U.S. bank members.
It feels like we're seeing history repeat itself. Remember the Global Climate Coalition back in the 90s?
Oh, yeah?
It was all of these industries coming together to oppose climate action.
Trying to protect their interests.
It feels very similar. Big players banding together, pushing back against change.
Right. And it makes you wonder, right? Like, is this really just a blip, or are we at some kind of crossroads here where financial interests and climate goals are diverging?
What happens to all that capital that was supposed to be, flowing into these sustainable investments?
Yeah, where does it go?
And what about the companies on the receiving end?
Right.
What does this mean for them and for our listeners who are invested in those companies?
Exactly what does it mean for their portfolios?
Will they change their approach to sustainability now?
Yeah, I mean, it's definitely something investors need to be thinking about.
Yeah.
Because BlackRock's decision could embolden other companies
Right.
to maybe quietly step back from their own public climate commitments, especially when they see the potential for political and legal backlash.
That's kind of scary, right? Like, could we see a shift towards less transparency when it comes to ESG practices?
Potentially, yeah.
Are companies going to start keeping their sustainability efforts under wraps to avoid scrutiny?
It's possible. And if that happens, how are investors supposed to know what's really going on?
Right. It becomes way harder to make informed decisions.
Much harder. And it raises a really important question.
What that?
Will the companies that are genuinely committed to sustainability
Yeah.
be penalized by investors who are suddenly wary of anything labeled ESG?
Or could this actually create an opportunity? Like, will we see the truly sustainable companies stand out even more now, attracting investors who are specifically looking for businesses with real climate credentials?
Yeah, that's a really fascinating question.
So for our listeners, what's the takeaway here? What does it all mean for their portfolios and the companies they're invested in?
Well, I think it's definitely a time to really pay attention to what your investments are actually doing. Don't just rely on labels like ESG or sustainable.
Right.
Do your research, dig into those company reports, look beyond the marketing.
Yeah.
And make sure your investments are aligned with your values.
This isn't just about checking boxes anymore.
No.
It's about understanding the nuances and making sure you're comfortable with the companies you're supporting.
100%.
And this landscape is changing rapidly.
It is.
What's true today might not be true tomorrow.
Right.
So stay informed, stay engaged, and be ready to adapt your investment strategy as this situation unfolds.
Be nimble.
Yeah, be nimble.
Absolutely. It really throws a wrench into, this idea of ESG being this like unifying force in the investing world.
Right.
It felt like everyone was jumping on the sustainability bandwagon for a while.
Yeah.
But now it seems like the wheels are coming off a little bit.
It makes you wonder, like, is this just the beginning? Are we going to see a full-blown return to a more traditional way of investing where it's just like profits over everything else?
It's hard to say for sure, but
Yeah.
one thing's for certain, the next few years are going to be fascinating.
Yeah.
To watch this unfold for anyone who's interested in how finance and climate change are intersecting.
Right, like how these two worlds are colliding.
Exactly.
Yeah.
We're likely to see a lot of volatility and uncertainty as companies, investors, and policymakers try to navigate these competing pressures.
Let's zoom out for a minute and try to understand, like, what is motivating BlackRock here?
Okay.
It seems like they're trying to walk this really fine line.
Yeah.
On one side, you've got this intense political pressure
Right.
to distance themselves from ESG.
Uh-huh.
On the other side, they don't want to alienate their clients who are increasingly demanding sustainable investment options.
Yeah, it's a real dilemma.
It is.
And I think what BlackRock is trying to do is thread the needle by saying,
Right.
hey, our exit from NZAM doesn't change how we manage portfolios or develop investment products.
Right.
Basically, they're saying we're still committed to sustainability,
Uh-huh.
but we're going to do it in a way that doesn't attract so much negative attention.
Right, like fly under the radar a little bit.
Exactly.
But is that even possible?
Yeah.
Can they really have it both ways?
That's the question, isn't it?
Like, if they're serious about sustainability, shouldn't they be willing to stand up to these political attacks?
Well, I think a lot of people, especially those who are really passionate about climate action, are going to be disappointed by this.
Mm-hmm.
They're going to see it as a betrayal
Yeah.
of the very principles that BlackRock claimed to uphold.
It definitely feels like a step backwards for the movement.
It does.
But let's play devil's advocate for a second.
Okay.
Some people argue that this whole ESG framework is flawed,
Yeah.
that it's too subjective and easily politicized.
Right.
They say that companies just focusing on financial returns
Mm-hmm.
is the best way for them to operate sustainably in the long run.
That's a perspective that's gaining some traction,
Yeah.
especially in certain political circles.
Right.
I think it's worth thinking about even if you don't agree with it.
Yeah.
The reality is ESG investing is still relatively new,
Right.
and there's a lot of debate about how to measure it, how to implement it effectively.
And that lack of clarity creates opportunities for, political maneuvering.
For sure, it's easy to attack something
Yeah.
when there's no clear definition of what it is.
Exactly. And that's why it's so important for investors to do their own research
Absolutely.
and really understand what their money is supporting.
Don't just rely on labels or buzzwords. Look at what the companies are actually doing.
Right. Their track records, not just their marketing.
Exactly.
So how do we think this BlackRock move is going to impact the broader market?
Okay.
Could this trigger a cascade of other companies backing away from their climate commitments?
It's definitely a possibility. BlackRock's decision could signal to other companies that it's okay
Right.
to prioritize short-term profits over long-term sustainability goals,
Yeah.
especially if they're worried about facing similar pushback.
What about the impact on clean energy companies?
Right.
Will they suffer if investors start pulling back from ESG-focused funds?
That's a real concern. Clean energy companies have benefited a lot from the flow of capital into ESG funds over the last few years.
Right.
So if that money dries up,
Mm-hmm.
it's going to be harder for them to raise capital and continue to grow.
But on the flip side, could this create a different kind of opportunity?
Hmm.
What if the ESG space becomes less crowded?
Yeah.
Will the truly innovative and sustainable companies shine even brighter?
That's a great question.
Right.
It really becomes a question for investors.
Yeah.
Do they chase potentially higher returns in traditional energy sectors?
Right.
Or do they stick with the companies that are building a clean energy future,
Mm.
even if it means riding out some short-term volatility?
It's a tough choice.
It is.
And I think it highlights how important it is to have a diversified portfolio
Absolutely.
and a long-term investment mindset.
Yeah.
Don't put all your eggs in one basket.
Hey.
Don't panic over short-term market swings.
Like, this is a long game.
Exactly.
And remember, this is just one piece of a much larger puzzle.
Yeah.
There are so many factors that are going to shape the future of ESG investing.
Right.
Technological breakthroughs, geopolitical events,
Yeah.
even consumer demand. All of this plays a role.
All right. Before we jump into our This Is Not Financial Advice segment,
Okay.
where we'll brainstorm some wild trade ideas
Sounds good.
inspired by this BlackRock news, let's connect the dots for our listeners.
Okay.
This is a lot to take in.
It is a lot. Yeah. It's helpful to think about this situation like a tug of war
Okay.
between these powerful forces.
Okay.
On one side, you have the growing awareness of climate change
Mhm.
and this increasing demand for sustainable investments.
Right.
And on the other side, you have political pressure
Yeah.
and the deep-rooted interests of traditional industries.
And BlackRock is caught right in the middle,
Right in the middle.
trying to balance these competing demands.
Yeah, their decision to exit NZAM is a concession
Mm-hmm.
to those forces that are pushing back against ESG.
Right.
But it remains to be seen if this is going to be enough to appease their critics
Yeah.
or if it will just embolden them to push even harder.
So the big question for investors is like, where will this tug of war ultimately lead?
Yeah, where does it end up?
Will ESG investing become more mainstream and impactful?
Right.
Or will it be pushed to the sidelines?
And will the companies in your portfolio be on the right side of history?
It's time to start asking tough questions
Absolutely.
about the companies you support
Yeah.
and making sure your investments reflect your values.
Stay informed, stay engaged, and be ready to adapt as the situation evolves. There's a lot more to come.
Okay, so let's have some fun now with our This Is Not Financial Advice segment.
All right, love it.
Time to get those speculative juices flowing.
Hit me with it.
All right. So imagine this: BlackRock backs away from their climate commitments, potentially signaling a softening on ESG investing across the board.
Okay.
Could this embolden fossil fuel companies
Yeah.
to get even more aggressive?
Interesting. Tell me more.
We're not just talking about a slight bump in oil prices.
Okay.
Imagine a scenario where a major oil producer, like, say, ExxonMobil,
Uh-huh.
throws caution to the wind and announces this massive new exploration project in a super ecologically sensitive area.
Whoa, that's a bold move.
Right.
But in a world where ESG concerns are fading,
Yeah.
maybe they think they can get away with it.
Exactly. And they might even use this to squeeze out smaller, more environmentally conscious competitors.
Right.
Who can't stomach such a risky play.
So how would we trade this?
Okay, so here's what I'm thinking. We go long, XOM, ExxonMobil, stock betting. They'll profit from this audacious strategy.
Okay.
But to hedge against the risk of a complete market meltdown if things go sideways.
Yeah, we need some tail risk protection.
Right.
What if we buy some call options on the VIX?
Ooh, the VIX, the market's fear gauge.
Exactly. It spikes when things get volatile.
If ExxonMobil's gamble triggers a massive backlash, like sanctions, boycotts, who knows?
Yeah.
The VIX will skyrocket.
For sure.
And those call options will print money.
Love it.
So when would we jump into this trade?
Well, for XOM, maybe we wait for a breakout above a key resistance level,
Okay.
like the 200-day moving average. That could be a signal that big money is starting to bet on a traditional energy comeback.
Okay. And for the VIX call options?
I'd say we want a longer dated expiry to capture that potential delayed reaction market panic.
Right. So we're playing the long game here.
We are.
What about our exit strategy? That feels tricky.
It is tricky. For XOM, we could use a trailing stop loss order
Okay.
to protect our profits if the momentum starts to fade.
Right.
And for those VIX call options, well, if the world doesn't implode and they start to decay in value, maybe we close them out once XOM has made a decent run.
Right.
It's all about managing risk and maximizing potential gains.
The risk reward here, what are we thinking?
High risk, high reward. This is a moonshot.
Yeah.
High probability of failure.
For sure.
But the potential payoff could be enormous.
All right. And this brings us back to our very important disclaimer.
Yes?
This entire segment is for entertainment purposes only.
Absolutely.
And it's absolutely not financial advice.
Do your research.
Do your research.
And remember, the market can stay irrational longer than you can stay solvent.
All right. So as we wrap up this deep dive into BlackRock's surprising move, what are the key takeaways for our listeners?
Well, I think the big one is that ESG investing is facing some strong headwinds right now.
Yeah.
And BlackRock's retreat could be a sign of things to come.
It's a complex situation.
It is.
With no easy answers.
The most important thing is to stay informed.
Absolutely.
Keep a close eye on your portfolio.
Mm-hmm.
Don't be afraid to ask tough questions about the companies you're invested in.
Yep.
And be prepared to adapt your strategy as this landscape continues to shift.
And remember, we're here to help you make sense of it all.
That's right.
Talk Tickers will continue to track this story and bring you the latest insights and analysis.
In the meantime, we want to hear from you.
Yeah.
Hit us up on social media. Share your thoughts on this BlackRock news.
What trends are you seeing?
What questions are you asking? Let's keep this conversation going.